Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. On Friday, September 26, the EURUSD pair continued its upward movement. After rebounding from the support zone of 1.1637-1645 and consolidated above the 76% Fibonacci level, 1.1695. Thus, growth may continue today toward the resistance zone of 1.1789, 1802. A close below 1695 would favor the US dollar, and a return to the 1637-1645 zone. The wave setup on the hourly chart remains simple and clear. The last completed downward wave broke the low of the previous wave, while the new upward wave has not broken the previous high. Therefore, the trend remains bearish for now. However, recent labor market data and shifting Fed monetary policy outlook support bullish traders, meaning the trend may begin to change again this week. To end the bearish trend, the price must consolidate above the last peak at 1.1819. On the 4-hour chart, the pair turned in favor of the euro, near the 1.1680 level. Growth may resume toward the 161% corrective level at 1.1854. A close below 1680 would favor the US dollar and open the way for further decline toward the 127% Fibonacci level at 1.1495. No development divergences are observed today. Here is Laurie Bailey with pound sterling dollar pair forecast. Let's have a look. The British pound capitalized on the general weakness of the dollar and increased risk appetite in the stock market, repeating the pattern from September. By returning above the 1.3364 level. The pound would clearly like to reach the target resistance at 1.3525, but it feels somewhat uncertain near the MACD line. It's a blue line on the chart, as seen on September 9 and September 11 and also on September 23. Therefore, only consolidation above this line, above the 1.3476 level, may give the pound a chance to hold above 35.25. The Marlin oscillator remains cautious, and while it's in a negative territory, the pound's growth may stay unstable. If Friday's US September labor market data comes out weak, further growth toward 1.3631 may be expected. On the 4-hour chart, technical convergence has taken shape in its traditional form. The Marlin oscillator has settled in a positive territory. The price now faces the significant task of overcoming 1.3476 and 1.3525 range. That's all for today. See you online soon.